name is Arturo Préstamo, and I'm chairman and interim CEO of Santacruz Silver Mining. We are oriented in the silver production and base metals as well, with a component of zinc. So thank you for having me here, Merlin.
Arturo, thank you very much for joining me. Santacruz Silver, market capitalization around $80 million Canadian. You've got production in a number of operating sites in Bolivia and in Mexico. You are about 18 months into the process of acquisition or post-acquisition of the Glencore assets in Bolivia. Can you just kind of give me an overview on where you are in that kind of assimilation process? Are you fully assimilated, or is there still more time to come?
I think we're very well advanced, Merlin, in the whole process. And the reason for that, I think it helps a lot the cultural similarities between Mexico and Bolivia. We share a lot of similarities, and that helps us, to overtake the operations and understand how people work, how people, what are their motivators and whatnot. And that's been really helpful for us. I think that has been one of the reasons why the transition process has been very smooth, and we feel we're very, very advanced in the whole process of undertaking the assets.
Have you had is the mining style and the mining operation very similar in Mexico to in Bolivia? You mentioned the cultural similarities, but just on an operational level, is there a similarity as well?
Definitely, there is, Merlin, and actually in our case, we have a lot of experience with these narrow vein systems. We know how to work them, and same in Bolivia. In Bolivia, our mines, most of the mining takes place in narrow vein systems, so we're very comfortable in that environment.
What have been the most significant changes that you've kind of carried out over the last 18 months?
Well, there's been different areas, if you allow me, from the administrative and from the operational. If you allow me, on the administrative, we have been trying to get slim staff in Mexico and in Bolivia, but at the same time, a more robust and let's say, if you allow me to put it this way, we're trying to keep as much as muscle in both jurisdictions, staff-wise or administrative-wise. We have been working on how to leverage on synergies that both countries or jurisdictions might have. We have identified different areas which we are working as we speak. For example, the accounting, we're working on getting the Mexican operation to be consolidated in Bolivia under the SAP software or platform, which we found very, very solid and very robust and reliable as a source of information. So that's something that we're working, and it's giving us some indications on some areas that we can benefit to have a slimmer, a most efficient staff operation here, or administrative team here in Mexico. So from the administrative point of view, I think that's one very important one. From an operational point of view, there are synergies that we're trying to leverage on, for example, the rock mechanics department. They're working closely, Bolivia and Mexico, to learn on previous experiences how to control certain areas or certain circumstances or situations where both areas, Mexico and Bolivia, both departments can share information. Same as some equipment and let's say purchasing power. There are some suppliers that have an international coverage, and as such, they are seeing us now as a whole group. So that is giving us as well some leverage on the purchasing power of some of the consumables and even underground equipment.
Thank you. So let's take a kind of a snapshot of the company where it is today. You've just published, or a couple of weeks ago, you published your quarterly report. You've got some highlights in there. You've produced, remind me of the headlines. You've produced 21.7 million ounces, I think, in the first half of the year. Sorry, that was your EBITDA, was the $21.7 million EBITDA. Remind me what your production numbers were for the first half. Sorry, I'm getting my numbers mixed up.
Absolutely. On the first half, we produced 11.2 million ounces of silver equivalent. And on Q2, we produced 5.5 million ounces silver equivalent. So, that's pretty much our production so far for Q1 and Q2.
What are your kind of key takeaways from your quarterly results? Is it steady as she goes? The costs are up a bit, perhaps, but how do you summarize your Q2 kind of result figures?
I think Q2 is kind of it's reflecting a process of stabilization, process of transition, being in an advanced stage. And we see for this year a continuation on the production in that range. We have already identified areas where we can increase production, but for the time being, our main objective is just to maintain, consolidate our production, and bring costs down in certain areas that we have identified. These changes takes time, so you will see in the coming quarters very likely improvements on our all-in sustained cash cost as a result of these identified areas of opportunity, and that's going to be our focus for this year, Merlin, and hopefully next year we can embark into let's say improvements that will give us an increase in our production organically, as we have already identified. Just to give you an idea, at Caballo Blanco Group of Mines, as we speak, we're very advanced and on time and in budget in the connection of Tres Amigos mine in Colquechaquita. That tunnel, that underground tunnel, will give you a lot of efficiencies or significant efficiencies at Colquechaquita and Tres Amigos. That will help you bring costs down as well, because you will be able to get the ore out from Colquechaquita in a more efficient way. So that's just to mention one of the activities taking place aiming to increase production and bring costs down.
Yes, so I was kind of looking for some detail, because you said that the transition isn't in an advanced stage. But what do you mean by that transition? Is it development of stope faces? Is it training of staff? Any more examples of what you mean by opportunities to reduce cost or advancing the transition? That would be most helpful to understand.
Right. Yeah. Well, this interconnection tunnel I was mentioning, it's one of the most important, let's say, tasks that we have in place right now to bring costs further down in our Caballo Blanco group of mines. As for Porco, for example, in Porco we are revisiting the mining plan, and we're targeting our initiatives or our production budget to veins that have a narrow system. I mean, they are narrow veins, but with higher grades than what Glencore was running back then. Glencore's approach was to mechanize the mine, which is, okay, but we feel that we can work narrow veins very efficiently, and that will allow us to reach higher grade veins or areas that were not mined in the past, and that will give us, of course, efficiencies, as you'll have better head grades, better recoveries. So for Porco, that's kind of the focus as we speak. And then for Bolivar mine, Bolivar, we're dewatering the main mine there, which has the watering program for the next year, which will allow us to keep going down into the system, and as well the Rosario mine in Bolivar. The Rosario mine is a mine that little by little, it's a new mine, but we're doing development and preparation of the mine as we speak. And once we have 2 levels ready and stopes ready for next year, that will be another, let's say, reason why, or another, another objective for us to bring costs down, as you'll be mining more ore from stopes rather than from development. So we're working on different areas at each of the 3 mines, or the 3 group of mines.
Okay, so kind of incremental gains across the group, with some being more obvious than others, for such as the interconnection tunnel that'll suddenly liberate the development schedule and the haulage system. Good, thank you. When you talk about the narrow vein mining at Porco, there are 2 things that jump to mind. One is the fact that Glencore had a mechanized mine, and presumably that was a minimum width of 2 meters or 2.2 meters, and that you are now able to mine on much narrower widths. What is a narrow vein mining width in Mexico? Sorry, in Bolivia.
In Bolivia, same as in Mexico, Merlin. Let's say for us, 1.5 meters and less than that, it's already a narrow vein system. Anything below 2 meters, it starts to be a narrow vein, and needs a different mining method, not to make it more efficient, less dilutive for sure. And
I think I have to touch on it. You know, you had a bit of tragic news from Porco. In July, there was a fatality. Was that linked to this narrow vein mining?
No.
And also in that report, you mentioned do kind of an investigation. So I know it's a difficult subject, but please, could you just kind of tell me a little bit more about what happened there?
No, absolutely, Merlin. And those are the kind of things that should never happen in no industry, no. But talking about our industry, it's something that very sensitive. For us, it's definitely, a very stressful situation. In this case, there was part of one equipment that this employee forgot in one of our inclined shafts. The inclined shaft has been working throughout the last few days, but it was a little bit, the rock was not well sustained, so that the area was closed. The inclined shaft was closed. Nobody can come into the area. But unfortunately, this gentleman took the chance to go back before any working, the shift begins. He thought it was appropriate to go back and recuperate the equipment that he left in that area. And unfortunately, at that very moment, some rocks fall, and he was trapped in the inclined shaft, and as a consequence, he lost his life. But that's
it's a difficult. It's a really difficult thing to talk about. In the news release, you said that there were that you were going to investigate it, and there were kind of conclusions and recommendations. Where are you in that process, and have you reached those conclusions and recommendations yet, or is it still work in process?
Well, definitely no. We have reached those. The investigations are pretty much finished, Merlin, and generally speaking, that's how things happened. Unfortunately, as well, this gentleman was on his own. Nobody was accompanying him, and that's not a protocol that. But at the end of the day, Merlin, it's a working process. Every single day, we need to make sure that our miners come into the mine and come out of the mine. That's the most important thing for us. And we need to make conscious about safety and health on our people on a daily basis. Unfortunately, sometimes the culture requires more extensive efforts from us to make us significant and conscious on our employees to be truly cautious and really stick to the rules and to the discipline that this industry requires, right? So it's a day-to-day working process, and for us, the most important thing to do before getting into the mine, make sure that they are conscious about the risk, make sure that they have in mind all the discipline and rule that the work requires, and work closely with them. That's what we're doing and what we'll keep doing. Hopefully, this kind of events won't happen again. But we're doing our best for sure.
Let's hope so. So let's just take a kind of a step back, and if we look at the company on the at a big picture level, what do we want to look out for? Are you saying that there's going to be incremental growth or steady state production? So what's going to change? Is it going to be the cost base or the production level or both?
Both actually, Merlin. We have some initiatives to achieve this. As we speak, those initiatives are taking place. And just to mention one on the production front, if you allow me. San Lucas, it's our trading company. What San Lucas does is purchase ore from the small miners around the different districts, and we process that ore at our 3 different mills, right? But what happens is that San Lucas is taking, let's say, on an average 1 week a month of each of your mills to process the ore that San Lucas has purchased, right? So your mines, in the other hand, they are keeping the pace of these mills to have them at full capacity 24/7, right? So as a result, you are, let's say, you are having 1 week of production from your mines that is not running through the mill, right? Because San Lucas requires time from your mills, right? On an average, it's almost 1 month of production that San Lucas is taking from your own mines, right? So, I mean, we need a new mill where we might be able to have an agreement to lease a nearby mill so that we can process the ore from San Lucas on a standalone basis. That will allow you to release milling capacity at your 3 mills, right? By releasing milling capacity, you will have now your mines at full, I mean, with full dedication to your mines. The milling capacity will be dedicated completely to your mining production. And San Lucas will be on a standalone basis with this new mill processing the ore that has purchased on whenever time. That will give you, just give you some reference, that will give you the same amount of ounces that San Lucas has been producing, but from your own mines, relatively speaking, no round numbers. So in other words, you can organically increase around 1.5 million ounces of silver equivalent on a quarterly basis just by having one mill dedicated to San Lucas. And that's something that we're focused as we speak. And hopefully we can have something arranged in the next coming months, and we'll be very pleased to announce to our investors.
Okay, so hopefully by next year you'll be able to kind of show that incremental growth.
That is correct. And in addition to that, Merlin, Caballo Blanco Group of mines, this interconnection tunnel between Tres Amigos mine and Colquechaquita will allow you to increase production there as well. So, I mean, I think we have a very clear objective and goals on how to organically increase our production.
So year to date, Caballo Blanco produced 2.6 million ounces silver equivalent.
Correct.
So when it grows, what will it reach?
On a yearly basis, should be Caballo Blanco. I mean, give or take, I don't have. It'll give at least another 20% increase in your production, because you are going to be releasing milling capacity at Don Diego milling facility, which is now dedicated on a monthly basis to San Lucas.
Okay, thank you. Now, in your presentation, you talk about having access to a $40 million Bolivian series of bonds in Bolivia in a variety of structures. You've got a $10 million working cap facility. You've got $7.7 million in cash at the quarter end. Where are you in paying off Glencore and the free cash flow that you can use for your own development plans? Kind of top level capital flows, right, please, in the company.
Absolutely. Well, our next payment to Glencore Merlin is in March 2024, and that is for $22.5 million, right? Approximately, round numbers, no? So our cash flow, our own cash flow, definitely might not be there for the full amount, and at the same time, we want to keep a healthy treasury in Bolivia and in Mexico. So we have different. You can work through a different blend of initiatives. As you point out, we have around $40 million of let's say access to $40 million on different vehicles in Bolivia in the bond markets. You have Zimapan, one of your companies in Bolivia, has a program for $25 million. And then you have San Lucas with another program for $15 million. So we can access those at any given time. In addition to that, you have a $10 million facility in place with Glencore, which we have not exercised as well. So that combined to your own cash flow will help you to pace the next payment to Glencore in the most convenient way, right? So as we speak, we're let's say reviewing the best alternative to be prepared for that time, but definitely we'll be in a good position when that moment comes.
Do you think the market is concerned by your balance sheet? Because if you just look at your share price performance this year, I know you can take it's quite spiky and quite volatile, but in February you were up at 57 cents and you're currently at 24 cents. This has been, I know the sector's been terrible, but do you think you've been particularly punished because of balance sheet concerns?
Absolutely. There's something around that. And also, Merlin, let's don't forget that this transition has been, from an accounting point of view, has been a challenging one, right? All the Bolivian companies were not under IFRS, and you bought 7 companies in Bolivia, and you have 3 companies, offshore companies as well, which none of them were under IFRS. So when we finished the audit or let's say the fiscal year of 2022, we were working hard to get these mines aligned to the standards that a public Canadian company requires. So, unfortunately, that complexity of this, the adoption of the IFRS took longer. It just to give you an idea, when it's your first adoption, you need to go 3 years back and bring those into IFRS. So that whole process, became a little bit challenging time wise, and we didn't came out with the, I mean, on a timely matter with our financial statements being filed, and as such we have we the stock was halted for approximately 1 month, and I think that was something that gave a little bit of a, let's say, of a weird flavor, if you allow me to put it like that, to our investors. I'm pleased to tell you that we're very comfortable with the whole process now. All the companies are fully IFRS, and we should never be in a position like that again. So I think that's one of the reasons. But of course, the balance sheet is an important one, and our working capital deficiency does not give comfort to our investors. Nonetheless, I mean, we have different initiatives that we're working to improve our working capital. Of course, the most important is our production and our own cash flow. But we have, as we announced or we have described in our MD&A, one of our companies, which has a liability for around $25 million, is in the process of being sold. And we should conclude that process in the next coming months. It's already in a very advanced stage, and that will clean your balance sheet or will help you improve your balance sheet, at least in the short-term liabilities for those $25 million. And with that being said, and that is one of the things that we're, as we speak, doing. But sorry, Martin, you were saying.
Well, no, I just if I can repeat back to you what I think I've heard in terms of the investment case, it's if you get the leasing on the mills for the San Lucas trading company, that'll give you a significant boost to your annual production. Some of the operating changes that you're making should reduce your operating costs, including the interconnecting tunnel at Porco and at Caballo Blanco, and the shift to manual narrow vein mining at Porco. The balance sheet will become clearer over the next 6 to 8 months as you hopefully sell off the company with the $25 million liability and provide clarity on the way that you're going to make that payment to Glencore by crystallizing the working capital facility, crystallizing the bonds. And so, that's the investment case, and the I guess the risks associated with that are operating risk and the silver price. Is that a fair summary?
That's a very, very appropriate summary, Merlin. And yep, you have just described the picture properly. Yes.
Okay, good. So for the investors in the audience out there, what would you? How would you kind of describe the news flow over the next 6 months for them to kind of keep an eye out on making progress and kind of ticking the boxes as you go through?
Right. That's a very important question. Well, first of all, we have the resource estimate under 43-101. Those reports are coming shortly in the next, let's say now in September, as we give guidance to our investment community in previous news releases. So we're coming on time with those, and those reports will allow us to give a guidance for next year in, let's say, by the end of the year at Q4. And I think in addition to that, our investors will have a good idea on what's our resource today, the life of mine that we have at each and every one of the mines we own, including Soracaya, which is an exploration asset in Bolivia. So I think that's a very interesting one. For the first time, Zimapan, the mine in Mexico, will have a technical resource estimate under 43101. So that will also be of value to our investors. So I think that's a very important news release. In addition to that, Merlin, we're working to align the reporting at each of our mines, and that will give us, and it's giving us already, comfort to come and tell the markets or give the markets a guidance on our next year's production, and also our goals for the year. As I was pointing out, the interconnection tunnel between Colquechaquita and Tres Amigos, the dewatering process at Bolivar, the initiatives at Porco to improve productivity and head grades. So we'll be able to give them a very clear idea on the steps that we're taking towards a more efficient operation all across the company.
Don Arturo, thank you very much for your time and for your clear explanations. Good luck with the progress in the months ahead, and I look forward to hearing from you as you tick off those milestones and those meeting those objectives.
Thank you so much, Merlin, and thank you for having me here in your program. And it's a pleasure for me to be here with you and your investors as well, to the investment community.